let's dig into it a little bit more. So explain to somebody who maybe doesn't know what an estimate is. Maybe they're a W-2 employee who just has withholdings, traditional withholdings. What is an estimated tax payment and why would
Yeah.
somebody need that?
Yeah, so an estimate is just it's just that, right? We're estimating what your tax is going to be next year, right? So when 2024 comes around, we're in tax season and it's 2024. So we're filing our 2023 tax returns. If we haven't paid in anything, we're going to get hit with penalties and interest on whatever is due if it's over a certain amount. And for a lot of the creators we work with, that's the case, right? They don't
Because the
have a
IRS wants to do this crazy thing and wants you to pay and just magically know what your tax bill is
right.
going to be and pay all of it in prior to when you file.
Yeah, and since your income changes January through December, there's no way we could know for sure what that amount is. And so what we do is we pay an estimate. And generally speaking, you want to pay 4 estimates throughout the year. So we call them quarterly estimates, right?
When do they
You
do,
don't
Garrett?
what's that?
When are they due?
So quarterly, the first one's due April 15th, which is a really tough one if you think about it, because a lot of people are paying their tax for 2023, and then they have to pay, if we're in 2024, they have to pay that first quarter for 2024. So you
Yep.
got two tax payments right then in essence, and that's kind of difficult. The second quarter is on June 15th, third quarter is on September 15th, and then the final quarter is actually January 15th of the following year. So if you're paying your final quarterly estimated tax payment for 2023, you can make that all the way up until January 15th of 2024.
And the reason that they're doing this, right, is kind of exactly what you said, right? So let's just use a simple example for people to understand. Let's say you're going to owe $100,000 in taxes. You make a lot of money. You're going to owe $100,000 in taxes, and we kind of generally know this. We generally have an idea because we work with you and we're doing planning for you. So quarter one, that April 15th, we've got your tax return for the prior year done. We're going to pay one quarter estimate April 15th of 25K. Then in June, we pay another one. Quarter two estimate, 25K. Quarter three, September, 25K. Now we're at 75K paid. Well, then coming up on year end, which is kind of where we are now, we're doing a tax plan for you and we see, hey, instead of 100K in taxes, we think it's going to be 150K in taxes. Then now you have a little window from year end of, 12/31/2023 to January 15th of 2024 where you can kind of determine that and then go ahead and pay that last quarter almost as a catch up payment per se, where you could say, okay, we've paid in 75, but we still think we're going to owe another 75. So maybe that last one ends up being more. Is that how you would do it, or what do you think?
Yeah, yeah, 100%. We get to the end of the year and our projection changes, and we just basically make up the difference. So in your example, you've already paid in 75,000. Well, the last quarter is due January 15th. So if we think our tax is going to be 150, we are going to pay the difference between what we've paid in 75 and the 150 we think it's now going to be. So
Hmm.
that's $75,000 check right then in January. And
Sure.
so that you're exactly right. That's exactly how it works. And if you're working with an accountant, ideally, right? And you don't have to be, you can do this yourself. But if you're working with an accountant, you're getting these projections throughout the year, right? So in the first quarter, honestly, not as important because a lot of things are going to change in the last three
You're sort
quarters
of
of the year.
guessing.
Yeah. In the first quarter, we're just guessing. We're probably going to base it a lot on what we did last year and just pay in something close, right? In your
Hmm.
example, going back to it, maybe we just pay in 25K, right? Just get something in there.
Yep.
And then the second quarter, right, 6 months or so have gone by, we can put together a better picture of what's going on. And then the third quarter, we have an even better picture. And we continue to dial it in throughout the year so that we know, like, once tax time comes, like, okay, this is how close we were to getting it right.
And it's a good point to people, I think, because as you said, I quote tweeted somebody earlier in the week who's basically saying, why don't these creators pay quarterly taxes? Why do they wait till the time they file the return to pay all of it? And it's a great question because a lot of them do pay quarterly estimates, and a lot of them do work with us and have someone like us that does projections and keeps them on top of it. But a lot of them don't, and a lot of them don't even know what estimates are. And maybe they are just waiting until tax time comes around. They're taking that 1099 from Twitch or from Kick or from YouTube and they're, plugging it into TurboTax and then, oh man, I owe all this money now when they could be prepaying that, avoiding penalties and interest and really just helping themselves out. And you said something at the beginning on how it works generally. Ideally, if you pay, let's just go back to my example, 25, 25, 25, and then 25, going into January of that current year, you've paid all the tax. So when you file in April, let's say, of 24, you don't owe any because you've already prepaid all of it. So that quarter one estimate that you're paying, if you're caught up, is the only payment that you owe. Now, we might not get it perfect. We might not dial it in perfect and you still might owe a tiny bit when we file. The point is that you've prepaid 98% of it, 99% of it. And maybe we overpaid a little bit or underpaid a little bit, but we're trying to get it all paid in prior to filing that tax return. Really, honestly, just to reduce stress. There's no difference besides small penalties and interest. It's really just to make it easier on these clients.
Yeah, and you're exactly right. These are estimates. The goal here is not to get it. I mean, if we could, right? If we could get it to where when we file a tax return, it shows zero
And we
due,
have done
zero
that
refund.
before. We have done
We,
that before.
yeah, it's hard. Like that comes down to a lot of luck too. What we're trying to
Yep.
do, I would say, is get it to about depending on the size of the creator, probably about $1,000 swing either way, right?
Mhm.
If we can dial that in, that's a pretty good estimate and projection. It's not perfect. The goal is not to be perfect. The goal is just to get you paid in so that you don't get hit with one major payment at one time. Because quite frankly, with content creators just being in the space as long as we have, cash flow and maintaining like saving cash it oftentimes proves to be difficult because people aren't thinking about the taxes, right? So when tax time comes, and it's sad because a lot of times we get these creators in January or February when it's too late to do a projection or anything.
Right.
It's like you said, that we punch the numbers and then they owe $20,000 and they're like, oh my gosh, I don't have $20,000. Like, what do I do? And we're like, okay,
Or
well,
even worse, $200,000, right?
yeah, to your point, I mean, this time of year is perfect for estimates because it's perfect for projections, right? We're
Mhm.
getting to the point where we are running out of time, but we also have, like, if we're doing a projection right now, we have more data because more of the year has gone by that we can really dial it in and get it close. So,
Mhm.